Good morning, everybody. It's Sunday morning. Waking up to all the tariff news. I saw a little bit of it last night. It's continuing throughout the day, and I know it'll be heavy news this week. I wanted to talk to you quickly this morning about the real estate world and how these tariffs might affect you. It looks like right now we're in talks tariffs between Canada, Mexico, and China. The biggest numbers right now with Canada and Mexico. I know they started at 25%. They may go up to 50%. That could be a big effect. And I can guarantee you they will not be remedied as quickly as the Colombia ones. We could be in this for a couple of years easily. And so how is that going to affect you guys in real estate over the next couple of years? The first thing I see is material costs. We get a lot of our wood from Canada and other building supplies, and that is a major input into new construction. So new construction, first off, if you've been thinking about buying new construction in 2025, 2026, you might want to consider moving that purchase up, because if these tariffs set in, prices are going to go up. We've been spoiled a little bit for the last 18 months. Builders have been offering huge incentives. I would expect those to be going away this year. So go ahead and get under contract if you're thinking about it. Also, if you get under contract with a new builder, just because you go under contract at $300,000, that does not mean you're going to pay $300,000 at the closing table. Most builder contracts, they've gotten savvy now. So one of the things they can specifically adjust for is cost of inputs like lumber. So you may sign an offer at $300,000, but it's going to be 6 months for that thing to build. You might be paying $325, $350, $375 by the time it's complete. So that is something you really want to look out for if you're going with new construction up. But as me and you guys know, I always say the best time is to buy today. So take a look at that. The other big thing around construction, I've got a lot of investor clients that are buying fix and flips, clients that are buying buy and hold. For you that don't know fix and flip, they're going to buy it, rehab it, sell it quickly for a profit. Buy and hold, they're going to buy a property and then hold it as a rental. There are material costs in both of those. If you have the ability to store supplies ahead of time, you might want to think about doing that. Now, that might not be what you do immediately, but if this thing drags out, that is something you might want to consider. You may want to consider, should I go ahead and make that move? Yes, your home equity may go up, but your home equity will go up for a reason. Probably will mean there's even less supply out there in the future. Right now in the Raleigh area, I think we're about a 1.7 month supply on single family. Now there are other places in the country that have much more supply than that. 3, 4, I've talked to some agents that even have 5, 6 months of inventory. But in the Triangle area, now you've really got to look at that scenario, because not only are you still going to be paying interest rates in the mid to high 6s, possibly low 7s, but the purchase price of that next house is going to go up, and the demand for that next house is going to go up. And we're coming into the spring. So there's going to be a lot more gears turning in real estate transactions and preparation for real estate transactions. I highly recommend you work with someone you trust and someone that knows the market. The other place that these tariffs definitely will come into play with is our retirement funds. I work with a lot of people that are nearing retirement or already retired. I'm helping them buy their forever house. They've gotten things squared away to make sure their money's going to last and with what they're invested in. This week and the next couple of weeks may be, I'm not even going to say maybe, will be a great time for you to reach out to your financial planner and just get a rundown. Get some feedback from your financial planner on what they're expecting. It's going to be really hard for them to really guide you right now because all this is just now happening. But go ahead and get on their radar that you want to know. You want to be educated on what's going on. It just so happens that I have a wealth and estate planning workshop scheduled at my office this Tuesday. It was originally just for the agents in our office, but we're going to cover a wide variety of things. I'll have an estate planning attorney and a financial planner there. If any of you would like to attend, just DM me. No, you can come. It's really just a workshop. We're going to be answering questions. So if you've got questions about how these things might affect you, your family, and your financial future, just DM me if you could like to come to that. This process is going to take some time, and change is hard. We've got to have the stomach for the change that's going to happen, because whether you like it or not, we're stuck with it for the next 4 years. So just like I talk to my clients when we sit down for that first meeting, I say, in this transaction, I want us to be proactive instead of reactive. And this is your time to start being proactive. So 6 months down the road, a year down the road, 2 years down the road, you're not looking back and saying, man, I wish I'd have done this. Man, I wish I'd have done that. This is your time to do it so that you can come out on top at the end of this. If you have any questions, let me know. I'll do as best I can to keep you guys updated as this goes on. I'll probably take a few times where I bring on a financial planner, just some different people around what's going on around real estate to help you make decisions. I hope you guys have a great week.